In the volatile world of digital assets, a single event can trigger a seismic shift. What if I told you that Bitcoin just shattered a critical resistance level? A price point that could redefine the future of cryptocurrency as we know it. This isn't just another daily fluctuation, it's a potential turning point that could signal the start of an unprecedented bull run or a major market correction. The implications are massive for every investor, and understanding what comes next is crucial. In today's comprehensive analysis, we're going beyond the headlines. We'll dissect this pivotal price movement with in-depth market analysis, charting the potential paths forward. We'll bring you exclusive insights from leading industry experts, place this event in its crucial historical context, and explore the latest regulatory news that could impact your portfolio. From institutional adoption trends to the underlying risks you must be aware of, we're covering every angle to ensure you have the complete picture. To stay ahead in this fast-paced market, you need timely, reliable information. So before we dive in, take a moment to hit that subscribe button and ring the notification bell. By joining our community, you'll never miss a critical market update. As a special thank you, we're giving you complimentary access to our exclusive Bitcoin Market Cycles Analysis Guide. This in-depth resource will give you the foundational knowledge to understand the forces driving Bitcoin's price. It's completely free for our subscribers, so don't miss out. Let's start with the current Bitcoin price situation and what the numbers are really telling us. To truly understand the market's pulse, we need to look beyond the surface-level price and dive deep into the underlying metrics that shape its every move. The story of Bitcoin today is one of consolidation, anticipation, and immense underlying strength, painted across charts and data points for those who know where to look. Bitcoin is currently trading at levels that have caught the attention of both institutional investors and retail traders worldwide. After a period of rapid ascent, the price has entered a consolidation phase, building a strong base above what was previously a major resistance level. This price action is critical. It suggests that buyers are stepping in to defend this new floor, turning old ceilings into new foundations. This period of sideways movement is often a precursor to a significant breakout, as market participants accumulate positions in anticipation of the next major leg up. The technical indicators are showing some fascinating patterns that could signal major movements in the coming weeks. For instance, many analysts are pointing to the formation of a golden cross on the daily chart, where the 50-day moving average crosses above the 200-day moving average. Historically, this has been a powerful bullish signal for long-term momentum. Furthermore, the Relative Strength Index, or RSI, has cooled off from overbought levels, suggesting the market has had a healthy reset and has room to run higher without being overheated. Global trading volumes have increased by significant percentages, indicating renewed interest from international markets. But it's the on-chain data that tells an even more compelling story. We're observing a consistent outflow of Bitcoin from major exchanges to private wallets. This trend suggests that investors are moving their assets into long-term storage, a sign of conviction and a reduction in the available supply for sale. This supply shock, combined with rising demand, is a classic recipe for upward price pressure. Now let's examine what leading cryptocurrency analysts are predicting for Bitcoin's future trajectory. The sentiment is overwhelmingly positive, but it's important to consider the full spectrum of opinions to make an informed decision. The consensus is building around a narrative of continued growth, driven by fundamental factors we'll explore shortly. Several prominent analysts are forecasting Bitcoin could reach new all-time highs within the next 12 months. Bullish targets range from $100,000 to as high as $250,000 per coin, citing the impact of the recent halving event and unprecedented institutional inflows. However, more conservative voices urge caution, pointing to potential macroeconomic headwinds like interest rate policies and geopolitical instability as factors that could temper this explosive growth. These predictions are backed by increasing institutional adoption and growing acceptance of Bitcoin as a legitimate asset class. The launch of spot Bitcoin ETFs in the United States has been a watershed moment, unlocking a torrent of capital from traditional finance. We're no longer talking about just tech enthusiasts. We're talking about pension funds, endowments, and multinational corporations diversifying their portfolios with Bitcoin, treating it as a form of digital gold. Market sentiment indicators are showing a shift toward optimism, but experienced traders know to watch for potential volatility. The Crypto Fear and Greed Index, for example, has climbed out of the extreme fear zone and is now hovering in greed. While this reflects growing confidence, extreme greed can often be a contrarian indicator, signaling that the market may be due for a short-term correction. Navigating this requires a steady hand and a clear strategy. Regulatory developments continue to shape Bitcoin's landscape, with several countries making significant policy announcements. This global regulatory patchwork is slowly but surely coalescing into a more coherent picture, which is perhaps the single most important factor for long-term, sustainable growth. Uncertainty has been the biggest barrier to entry for large, conservative institutions, and that barrier is now being dismantled, piece by piece. Recent regulatory clarity in major markets has provided more certainty for both individual and institutional Bitcoin investors. In Europe, the implementation of the MiCA framework is creating a unified set of rules across the EU, while in financial hubs like Hong Kong and Dubai, proactive and crypto-friendly legislation is attracting talent and capital. This competition between nations to become digital asset hubs is incredibly bullish for the entire ecosystem. These regulatory frameworks are creating a more stable environment for Bitcoin adoption and mainstream acceptance. They provide a clear playbook for businesses on how to handle custody, report transactions, and manage risk. This de-risks the asset class in the eyes of boards and investors, making the decision to allocate capital to Bitcoin not just an innovative move, but a prudent one. International cooperation on Bitcoin regulation is improving, which could reduce regulatory uncertainty across borders. Organizations like the Financial Stability Board and the G20 are actively working on creating a global baseline for crypto regulation. The goal is to prevent regulatory arbitrage, where companies flock to countries with the loosest rules, and to ensure a level playing field that protects consumers and fosters innovation worldwide. Bitcoin adoption is accelerating across multiple sectors, from retail payments to corporate treasury management. While it's often viewed as a store of value, its utility as a medium of exchange is rapidly growing, thanks to second-layer solutions like the Lightning Network. This technology allows for near-instant, virtually free transactions, making it viable for everyday purchases like buying a cup of coffee or splitting a dinner bill. Mobile Bitcoin payments are becoming more user-friendly, making cryptocurrency accessible to mainstream consumers. But its most profound impact is being felt in emerging markets. For millions of people living under hyperinflation or with limited access to banking, Bitcoin represents a lifeline. It's a way to preserve their savings from currency debasement and to participate in the global economy without needing a traditional bank account. Major corporations are adding Bitcoin to their balance sheets as a hedge against inflation and currency devaluation. Visionary companies are now treating Bitcoin as a primary treasury reserve asset, superior to cash, which loses purchasing power over time. This strategic shift signals a deep conviction in Bitcoin's long-term value proposition and sets a powerful precedent for other companies to follow. Educational institutions are incorporating Bitcoin and blockchain technology into their curricula, preparing the next generation. Top universities from MIT to Stanford are now offering dedicated courses and even full degrees in blockchain and digital currencies. This academic formalization is creating a pipeline of highly skilled talent, ensuring the continued development and innovation of the Bitcoin ecosystem for decades to come. Bitcoin's mining network continues to evolve, with increasing focus on sustainable energy sources and improved efficiency. The mining industry is undergoing a green revolution, actively seeking out stranded or wasted energy sources. From harnessing flared natural gas at oil fields to co-locating with solar and wind farms, miners are becoming energy innovators, helping to stabilize power grids and monetize renewables. Hash rate improvements and network security enhancements are making Bitcoin more robust than ever before. The hash rate, which is a measure of the total computational power securing the network, is consistently hitting new all-time highs. A higher hash rate means it is exponentially more difficult and expensive for any malicious actor to attack the network, making Bitcoin the most secure computing network in the world. The shift toward renewable energy in Bitcoin mining is addressing environmental concerns while maintaining network security. Recent data from the Bitcoin Mining Council suggests that the sustainable energy mix has now surpassed 50%, making it one of the greenest industries on the planet. This data-driven approach is effectively countering outdated narratives and showcasing the industry's commitment to a sustainable future. Bitcoin's decentralized network continues to demonstrate resilience and reliability across global infrastructure. With tens of thousands of nodes operating in nearly every country, The network has no central point of failure. It has operated with near-perfect uptime for over a decade, processing hundreds of billions of dollars in transactions without a single bailout or intervention. This is the quiet, unyielding power of true decentralization. To summarize, Bitcoin's current position shows strong fundamentals across the board. We've seen its price action demonstrate remarkable resilience, breaking key resistance levels and signaling a maturing asset. On the regulatory front, the landscape is becoming clearer. Landmark decisions like the approval of spot Bitcoin ETFs have provided a legitimate entry point for institutional capital. Simultaneously, adoption continues its upward march, with corporations integrating Bitcoin into their treasury strategies. And underpinning all of this is the network's security, which has never been stronger, evidenced by a hash rate that consistently reaches new, all-time highs. The combination of institutional adoption, regulatory progress, and technological improvements positions Bitcoin for continued growth. The wave of institutional capital is just beginning, and its impact could be profound. Beyond that, technological improvements are expanding Bitcoin's utility. Innovations like the Lightning Network are tackling scalability, paving the way for faster, cheaper transactions. This development of a Layer 2 ecosystem on Bitcoin's secure base layer is expanding its capabilities far beyond being just a store of value, opening doors to new applications we're only beginning to imagine. However, it's crucial to approach this space with a clear-eyed perspective. The path forward will not be a straight line. As always, remember that cryptocurrency investments carry inherent risks, including significant price volatility and shifting regulatory landscapes. Therefore, it is absolutely essential to conduct your own thorough research, understand your personal risk tolerance, and invest responsibly. A long-term perspective is often your greatest ally in navigating this dynamic asset class. If you found this analysis helpful, please subscribe to our channel for more Bitcoin insights and cryptocurrency updates. And don't miss our next video where we'll be analyzing Ethereum's latest developments and market predictions. Thanks for watching, and we'll see you in the next video.